Ladies and gentlemen, good day and welcome to Astra Microwave Products Limited Q1 FY'25 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. S.G. Reddy, Managing Director. Thank you, and over to you, sir.
Thank you, and good evening, everyone. A warm welcome to all the participants to the post-results call of our company. I am with my colleagues, Mr. M.V. Reddy and Mr. Concall, and SGA, our investor relations advisors. The results and investors presentation for Q1 are uploaded on our company website and stock exchanges, and I hope you had a chance to look at it. In terms of the highlights, I am happy to share with you that Q1 FY'24 is a good start to the financial year FY'25, keeping in mind the seasonality pattern inherent to our business, wherein Q1 is the weakest quarter and the major chunk of revenues are captured in the subsequent part of the financial year. We want to highlight that we have also improved our gross margin significantly, which were primarily driven by continuous improvement in the product mix, where the domestic defense business contributed to 65% of the top line, followed by exports, whose contribution is around 21%, and the space with 11.5%, with the rest of the business coming in from metrology and other sectors. This performance is in line with our expectations and guidance. Coming to our order book, we have crossed the milestone of 2,000 crores mark this time, where the standalone order book as of June 2024 stood at 2,099 crores, and our order wins continues to be healthy. As guided in Q4 earnings call, we have booked about 3,002 crores worth of orders in this quarter, out of which 240 crores of orders are from defense industry. On a consolidated basis, our order book stood at 2,365 crores as of June 2024. Overall, our order book comprises of 88% of the domestic orders, which are largely BTS, which enjoys good margins, and 12% of export, which is a mix of BTP and BTS business. Our consolidated order book consists of 120 crores worth of service orders, which are typically margin accretive. Our focus remains on getting more orders, which consists of high proportion of complex system projects. Coming to our standalone financial performance for Q4 FY'24, we recorded a growth of 16% in our top line on year-on-year basis. With a tilt in towards the domestic business, our gross margins have taken up healthy 41.8%, recording a significant improvement on year-on-year basis. Employee expenses have slightly gone up because of the increase in the number of skilled and professional employees. This is mainly to our employee addition at our Bangalore facility. At the end of the quarter, the employees count is close to about 1,537, up from 1,468 at the end of the financial year. EBITDA stood at 23 crores as against 5 crores in the same period of last year, and the margin stood at 15% as against 3.50% of previous period. The company reported profit after tax of 5 crores, and which was a loss of 4 crores at the corresponding period of last year. The execution of space orders continues to be good, and more than 11% of revenue is coming from this segment. Export sales revenues was also in line with the previous quarter, remaining stable at a reasonable level of 21%. We are confident about the growth in the overall industry, as we believe that the government's objective has widened, and the implications of the Indian government's Atmanirbhar Bharat program extends beyond import substitution. It also provides Indian companies like Astra, which has expertise and engineering talent, with a platform on which to build global visibility and businesses. In line with this, we will continue to grow our capabilities strategically and achieve our targets step by step. And lastly, for the current financial year, we maintain our target, which was given previously, for an order book in the range of about 1,200 to 1,300 crores, and a top line in the range of 1,000 to 1,100 crore, with a profit margin to the tune of about 16 to 18% on standalone basis. Now I hand over to Mr. M.V. Reddy, followed by Atin Kabra to share their thoughts.
Thank you. Good evening, everyone. As we review first quarter of FY'25, we are happy to say that we started well with a positive trend, especially considering the orders booked in the first quarter and also opportunities emerging out in our business domain. We have robust order book of 2,000 crores plus as on date and seeing a good visibility of growth trajectory in all verticals of business segments, which are of prime focus area. With regard to the business highlights of Q1 FY'25, we have bagged good development and production orders in radar and electronic warfare domain in the first quarter. Out of 303 crores orders booked, 80% are from domestic segment, constitutes of 36% of development contracts in nature, and rest are in production. We made a breakthrough in replacing an imported critical wideband receiver for EW project, which DPSU has been using a product of foreign make, and the DPSU has the production order. Also, we have bagged precision approach radar and repeat order of Doppler weather radars in this quarter. Our anti-drone radar is ready for the deployment in the field, and we have been responding RFPs from various agencies. We hope to get few contracts in the last quarter of FY'25. On the sales front, we had a significant improvement as compared to the last year first quarter, and we don't foresee any major challenges to meet our guidance of 1,000 to 1,100 crores for the current financial year. Despite of the current geopolitical situation, our JVC ARC doing fairly well with the order book of $48 million and expecting to book another $10 million in next 2 quarters. ARC is expected to book revenue of $37 to $38 million for FY'25. We would like to reiterate that going forward, we have a good visibility to maintain sustainable growth with the opportunities emerging in the domain of our operations. With this brief note, now I hand over to Mr. Atin Kabra to share his thoughts. We would be happy to answer your questions. Thank you.
Thanks, SG. Thanks, MV. And welcome, everybody. In our QIP documents and our ongoing investor interactions, we had indicated that we believe our growth story is going to be rear-ended. And as MV has just emphasized, and as he mentioned, our burgeoning order books actually point towards continuation of this trend, and the future looks quite positive. We are very comfortable, as reiterated, with our growth guidance of 18 to 22% organic growth, which we have already shared with you. In addition, as we had mentioned last time, we have created a framework for growth beyond this organic growth and in the form of a LEAP strategy. Taken together, organic growth plus LEAP creates a momentum for some serious value creation for our shareholders over time. Our focus, we had mentioned about a year back to you, was enhancing our ROEs, and I am sure you would have noticed that the ROE is around 14% now, with return on capital employed crossing 16%. We are now focusing more on efficient working capital management, and under the astute leadership of SG Reddy, we are quite confident that we will be managing our working capital deftly without diluting our shareholders for working capital. I specifically mentioned a long-term timeline, as research-led products require time to create IP and then time to commercializing the IP so created. As you very well know, we define ourselves to be in the IP business. We are in the business of creating IP, enhancing our IP, and that can be done both through our own internal efforts as well as collaborations. But eventually, we are in the business of monetizing intellectual property. To put it very simply, IP, we believe, gives us the staying power and the moat which is critical to competitive pricing that shall allow us to stay ahead in a very competitive arena and enable us to monetize our IP on an ongoing basis. So in today's session, I had a desire to bring into focus our efforts at IP creation, enhancement, and monetization. So if you look back and step back for a second in time and look at the trajectory of growth of Astra, you will notice that the net turnover of the company has increased consistently over the last 4 years to more than 1,000 crores this year. If I'm not wrong, we were 426 odd crores in FY'20. The entire team at Astra has been scrambling to keep up with the sales growth and meet the enhanced order flows. The focus had been on completing the orders and then focusing on the next set of orders. So we have embarked on an exercise now aimed at figuring out the IP which has been created within the company and shelved to a large extent, which we can now either monetize on a standalone basis or combine it with the other IPs which may be available within the company or externally available to create value. So to our surprise, we found that we had multiple products and technologies which had been created and then not acted upon any further post-order completion and had just been filed away as the teams got busy in fulfilling other orders. So taken out of cold storage and updated with the current tech standards, we can productize these technologies on their own or combine them with other technologies, and that's a low-hanging fruit for us. The incremental efforts at making this tech viable and commercial is minimal and offers us an easy way to monetize our efforts. This exercise has been concurrent with identifying more project leaders within the company and ensuring that they share the vision which we are defining with you here. And again, I'm glad we took this effort and I have identified some serious talent which resides within the company. The idea is, going forward, to empower these leaders and groom them into future project leaders with P&L responsibility eventually. Any organization, especially a tech and IP-driven organization like ours, is only as good as its people. And last 6 months of the senior management time has been spent in identifying talent and working around strategies which will lay the foundations for sustained future growth delivered by our talented next generation talent pool. So these initiatives are hands in glove with our LEAP strategy. More project managers with a deep grounding in tech, with a deep grounding in company culture, not only lays the foundation for organic growth, but also helps us think outside the box on a collaborative effort which underpin our LEAP strategy. I'm glad to inform you that the base pillars of LEAP strategy, which were around financial accretiveness, productization, and lean and learn, implying a collaborative approach with external IP holders also, is well on its way to deliver results. Glad to share that 2 definitive binding term sheets have been signed this past quarter alone. One in the area of chip design services and another in the radar space. While discussions have been initiated with multiple companies, both listed space as well as in the smaller unlisted space, for enhanced collaboration with the platform which Astra provides to further enhance our joint intellectual property and create products which are well suited for the future. We are also in a hurry to monetize things at the fastest possible pace, and collaborations are possibly one way to go about doing this. We aim to conclude a few such collaborative arrangements every quarter going forward. and that is one of the base premises of our LEAP strategy. To conclude, Astra will continue to build on its track record of delivering on its numbers, and we will, in all likelihood, achieve our targeted 18 to 22% organic growth rate. And LEAP strategy has the potential to deliver a further upside onto these numbers. The LEAP framework is very much in play, and definitive collaborative agreements have been signed with 2 partner companies. Many more are in the works. We are grooming our next generation of leaders with eventual responsibilities for project management, and P&L responsibility will be run through them. And multiple efforts are in place to lay the foundation for a sustained future growth to be led by our next younger generation. So with this, let's open it up for question answers, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Dixit from ICICI Securities Limited. Please go ahead.
Yeah, hi. Good evening, everyone, and thanks for the opportunity. Congratulations for a good set of numbers. I have 3 questions. The first one is essentially if I look at not YOY but QOQ mix in revenue. So our domestic percentage has gone up, export has come down, but still we find that EBITDA margin has gone down compared to Q4. So if you could just highlight what caused this, whether it is execution of some low margin orders in this particular quarter, and how do we see this trajectory going ahead?
Yeah, Amit, complete your questions.
Okay. The second question is on essentially very interesting thing that you highlighted on anti-drone radar. So are we limiting ourselves only to radar, or there would be a soft kill and hard kill mechanism also? And what kind of opportunity are we seeing by end of, let us say, FY'25? The third question is that recently there was a media article suggesting that we have executed AAAU for the shipborne radar. So just wanted to understand the opportunity size of this and when we would be able to commercialize this.
Okay, Amit, I'll take the first question. The remaining 2, Mr. M. Reddy will take. It is very difficult to pinpoint exactly why this. I have to really look at each individual product sale that has happened in the corresponding quarters to exactly answer your question. But otherwise, I would say that in general, to a large extent, about 90%, the margin variance comes in only because of the product mix. Specifically to answer your question, probably I have to dig a little deeper and come back. I will not be able to answer right now.
Yeah, Mr. Amit, regarding your second question about the anti-drone system, yes, we are working on a soft kill anti-drone system, but as a part of that, we have completed the radar development portion and we have released to the market as few customers are asking for only the radar portion. And also this soft kill system is on the way, and think maybe another few months we will be in a position to complete development of entire anti-drone system with the jammer. As far as hard kill is concerned, we are exploring that option, but we are yet to decide on that particular portion. Regarding the third question, as far as the AAAU of SBR, which we bagged from DRDO and executed in the last year, and this year we are going to commission it in the Navy. Yes, there are a good number of opportunities are there for this. What we heard from the customers and the Navy that they are looking for minimum 2 to 3 more in next 2 years time frame. So this is what we heard from them. But unless we get firm RFP on hand, it's difficult to commit anything on that front. Thank you.
So given the, the opportunity size, the new system that we have, ADS and all, so what kind of order inflow could we expect, not for this year, I mean, but for over next 3 years, let us say, if you were to give a cumulative number on the basis of platforms we are involved, etc.?
Yeah, actually, we have already responded few RFPs, and the current year, the RFPs, what we have responded or we are expecting to be received the order of at least about 500 crores. But since we are in competition, we are not sure how much we are going to grab from that particular segment. But actually, there's a few inquiries which we are expecting from services that will have a large size of business. For that, we are getting prepared ourselves to make full complete system.
Okay. All right. Thank you so much and all the best.
Thank you.
Thank you very much. The next question is from the line of Hiren Ved from Alchemy Capital Management. Please go ahead.
Yeah, hi. My name is Hiren, and thanks for taking my question. Mr. Atim Kabra mentioned about the LEAP strategy, and I want to extend this a little bit further, that given our size, which is, just about 1,000 crores this year, as per our guidance, what stops us from growing at, let's say, 30-40%, right? Is it the lack of external opportunity, or are we too narrowly focusing on radars and certain segments of the defense industry? And secondly, and it's the right thing to do, which is to invest in IP, but that requires serious capital. So how much money are you planning to spend on IP over the next couple of years? And why can't we aspire to have margins which are upwards of 20 to 25% if we have our own IP? Thanks.
I'll answer this thing. Let me take the IP question first, right? Okay. The IP, Astra, think of Astra as a platform for a second, right? We have a track record, we have the capability set, we have the marketing ability, etc., which has been there, and it's only now that we are opening it up from an IP acquisition, IP collaboration point of view. We spoke about, there are products, unfortunately I cannot go into details of these products, but there are products which are being contemplated, where let's say if we had the capability to make the radar, right, then can we add in the next logical step which has to be taken in the battlefield if an incoming threat is detected by the radar, right? Can my system alone do it? I may not have the necessary IP for that, okay? So do I create it from scratch? Do I reinvent the wheel? Or do I collaborate with somebody who has the IP and create a better product and combine our resources and create a product? It may not necessarily require oodles of capital to do so, by the way, right? Because it is equally in the interest of the other party also, for our collaborators, to commercialize their products. As I mentioned, 2 transactions have been done, and they will result in significant IP accretion over a period of time for Astra. We are not really spending much on these acquisitions, or on these IP collaborations, if I may say. So I would de-link, IP from owning the IP exclusively, but would rather focus on more collaborative approach, with Astra contributing a lot towards commercializing and taking the lead in creating products out of it, which also links in with your earlier question. Right? If you look at our history, we were quite small, and we will cross 1,000 crores this year itself. And our focus has been to to productionize the orders which have been coming in. Okay. Productionization of existing orders coming in and keeping pace with the growth, in a way did not give us the leeway or the time required or the effort required to productionize, to productize. So productionization versus productization, okay, which is our focus going forward. So if you see organic, when we talk of organic growth is coming in from our regular productionization of the order flows which is coming in. But now given our size, and as you very rightly said, we have the size now, okay, where we can offer ourselves as a platform, and that will allow us to focus on products which on a recurring basis when they sell gives us the kind of margin expansion and sales expansion which we are looking for. And that's where probably the surprise which we speak about on account of a leap strategy will come in. But let's wait for the time. Let the numbers reflect what we are saying. So right now we focus on, when we give you the guidance, we focus on the productionization of the orders. I hope I'm answering your question. I've answered your questions.
Yes. I have one more last question. That we have seen that in many defense companies, supply chain is becoming a big constraint. And are we working on seeing that we are not constrained in terms of productionizing because of supply chain issues, and creating enough other sources is something that we've seen with a lot of other players in the industry. I just wanted to have your views on how you guys are thinking about this constraint.
I don't think we are expecting any serious supply chain constraints. Well, I guess given the size, given our management focus on the productionization front, I think we are fairly well set on in this particular area. Where we see constraints are on the evolving technology, where trained manpower is hard to come by for the next gen of products where we need to leapfrog into. So to answer your question, we are fairly well appraised of the supply chain challenges, and therefore resilience is being built into the system. Of course, if you have external events like sanctions and all, that's a completely separate game. But other than that, we don't significantly see any supply chain challenges.
Just to add to Mr. Asim, basically we import electronic components and of course few complex PCBs from abroad. But otherwise, the rest are like, we'll be sourcing out from indigenization. And also, I would like to highlight one point here is, we do ourselves with our strategic components as we design and we get it fabricated, like MMICs and all. So these are our components which usually will have a serious impact based on the geo-global political situation. So that's something which, in fact, is advantage to us, that all these strategic components we have within our control. Otherwise, usually we don't have any supply chain issues for general electronic components or PCBs.
Actually, this is a very important point, and when you talk about competition, probably you should consider the fact that we have a very significant net block which has been created. Okay. So the capabilities have been created upfront, and now is the time to reap the benefits from the investments which have been made over the last so many years into the company. So, our return ratios were not looking good because the investments have been made upfront. And now as production scales up, you will see ratios are, proof is there already with you, right? The ratios are improving significantly.
Okay, thanks so much and all the best.
Thank you very much. Ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Koul Sarjeet Yadav from Mount Intra Finance Private Limited. Please go ahead.
Hello, sir. Good evening. I just have one question about the Tejas delay. So we are hearing a couple of things that firstly, because of the GE engines, the Tejas is getting delayed. And secondly, also the Israeli company is unable to provide the ASA radar. So our company has been supplying AAAU for the ASA. So how do we see these two situations? It looks like a risk because of the delay. At the same time, opportunity when we see the Israeli company unable to supply. Can you comment on this, sir?
Yeah. On the first part of your question regarding the supply issue of GE engine, of course, we cannot authorize to comment on that. But yes, we also heard about this. There were some issues, but also we understand from the customer that they have been making alternate arrangements. And I don't think they can put any delay factor as far as the other sensors are concerned. In fact, the Uttam radar, whatever they planned, is the discussions are going very actively, and maybe the next 3 to 4 months time frame, we should be in a position to get the first contract. So that is how the discussions are going on. So we don't see any major delays, but though there will be slight delays and but we don't see any major issues as far as that particular part is concerned. Then second is regarding the other imported radar which is not being functioned. That also again we are not authorized to comment on that. But yes, that is something which the DRDO is trying to push as early as possible to to HAL, and probably we may get more quantity in case if Israel cannot supply this particular radar. So we are geared up as far as Astra is concerned. We are geared up to produce in numbers. In fact, we enhanced our facility. Recently, we have added auto bonding facility, by virtue of which, in fact, our subsystems, that is the PR module of those radars, we can produce manifold, in the sense about 20 times than what we made it with semi-automatic facility. So that way we have enhanced our infrastructure, we scaled up our capacity, we are geared up to manufacture as many as numbers as we want.
Thank you, sir. Thank you for your response.
Thank you very much. The next question is from the line of Ketan Gandhi from Gandhi Securities and Investments Private Limited. Please go ahead.
Hi, sir. Just couple of questions. One, I just missed, did you give any guidance for the order intake for this year?
Yeah, we have given.
Yeah, can you please repeat? I just missed it. I'm sorry.
In the range of 1,200 to 1,300 crores.
Okay, great. And sir, do you want to share any update on Manpack SDR?
Yeah, actually the flight, there's a final test they are planning to conduct sometime in mid-October. I think rest all the procedures have been through. I think mostly by mid-October we will have a field test. So once after that test we will come to know who all will remain in the fray.
So any final, total how many final contenders for this? Last time you mentioned about 3. Is it the same or any changes?
Yeah, as of now it's 3.
Okay, thank you. All the best, sir.
Thank you.
Thank you very much. The next question is from the line of Neeraj Mansinka from White Pine Investment Management Private Limited. Please go ahead.
So just wanted to know what are the top 5 programs that would be critical for the company for the next 2 years in terms of order book?
We didn't get you. Can you just repeat again your question?
My question is, what are the top 5 programs
that would be critical for our order book accretion and revenue growth in the next 2 years?
Yeah, there are many projects, as you know, we have been addressing, radar and electronic warfare domain. Especially if you take in the radar, we have been addressing airborne radar, and also the ground radars, shipborne radars in all three segments. Like airborne radars, we have been working for AWC Mark 1, Mark 1A, and also we are waiting for the RFPs for Mark 2. Similarly, like SDA Mark 1A, we are already there, and we will be addressing Mark 2. So there are many opportunities are coming out. Similarly, there is Su-30 opportunities also will come. Of course, they are all in competition, so we have to wait and see how many we win in that. Similarly, like in the ground segment, there are many radars, like we are talking about Kusha, like QRSAM, Akash NG, Akash Prime, WLR, repeat orders, these are all which customers, DPSs are likely to get. So we will be getting subsystems from those particular segments. And shipborne Navy, as I said, we are likely to get some repeat orders from Navy. So these are all some of the opportunities as far as the radars are concerned. And in electronic warfare, we have been working for pod jammer for SDA Mark 1, and as well as we have been working on the ongoing production programs of BEL, like Nayan Shakti, MS Shakti, and all these programs we are there. And also we are there in the EW programs of BEL, like DR118, R118. So all these programs, we have some orders on hand, and we are likely to get more orders, repeat orders on this, from these customers.
Okay, but anything which comes to your mind that these, like for example, we have this Uttam radar. So any large order that you think you were assured, but it's just a delay of the RFP?
Yeah, actually, see, the mandate is clear. Yes, Air Force, HAL is planning to take some quantity in the first phase. Exact quantity will come to know in a couple of months time frame, but yes, Similac has already given clearance for 12 numbers for the first phase, and then thereafter they will induct more and more. And going forward, yes, there is a, as you know, all of you know, this 97 numbers more also, the UN has been cleared. So once they get, HL gets contract, probably they will start working in that also. So we are hopeful to get more quantity from Mark 1 itself.
Okay, last question. So what is causing a delay in the Virupaksha project?
Yeah, actually, the customer, DRDO is working on the configuration part. I think this what we understand that they are working on this configuration. Once they complete, they will be floating RFPs, and once it is in the competitive mode, so we'll be competing in that.
Okay, but any thoughts on when you see this scale up happening?
Scale up of?
The Virupaksha. Any thoughts on when you see this?
The first contract itself that we know from DRDO, I think probably we are expecting RFPs mostly by next quarter.
Okay. So last question on the Akash missile. BDL has also put an RF seeker manufacturing facility. So, and what we thought was you were one of the sole suppliers of that. So, any comments on how will it impact you?
No, what BDL has been set up the facility and manufacturing is I think it's understand better. I think it is gimbal seekers. But no, what we are working is totally different. We are working on ASA seekers. And in that, we got a few development contracts from DRDO. In one particular frequency band, we have already delivered, and we are expecting some small repeat order also. And other band, we are, trying to complete it by this month end. So we are working in a totally different technology as far as seekers are concerned. The other technology where, BDL and other companies were working on that. Those speakers also we have RF components. We have been supplying to PSUs and other companies.
Okay. Thank you very much.
Thank you very much. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Rupesh Tatya from Intel Sense Capital. Please go ahead.
Hello, sir. Thank you for the opportunity. My first question, sir, is with respect to Uttam radar. So in this, we only supply antenna units, sir, or we supply other components as well?
We supply antenna active array unit. It's a complete antenna unit. And other parts, there are 3 more companies who have been supplying the portion of it. But the 75% of this radar cost, is supposed to be antenna unit only.
And that is exclusively supplied by us?
As of now, yes, we have exclusively.
As of right now, yeah.
And sir, I mean, what would be the value per radar package?
No, I don't want to go more specific into the radar cost and all because it's an open conversation. I wanted to maintain confidentiality part.
Okay. And so then what would be opportunity size? I mean, Uttam will be used in, I think, Tejas from 28 aircraft onwards. And then would it be also used in, Sukhoi or Dornier upgrades as well? What is the opportunity size for Uttam radar?
Well, in fact, we are expecting around close to 1,100 to 200 crores worth of business from the Uttam radar in next 3 to 4 years time frame.
But it would be used in all these programs, sir? Tejas, Sukhoi, Dornier? Or only in Tejas?
I'm not talking about Sukhoi. Sukhoi is a different one. I'm not discussing about Sukhoi. It's only LCA Mark 1 and I've considered more on, phase 2 also. Phase 1 and phase 2 put together.
Okay. So LCA only, phase 1 and phase 2, it is 1,100 crore.
Yeah.
Okay. And then second question, sir, is on Ashwini radar. Are we involved in that program in India?
Yes, we also bid for that, and we are in competition, and I think a TEC is going on. So beyond that, we don't want to give any information. So yes, we have participated in that program.
So when is the result expected of that tender, Ashwini radar? And then what components would we be supplying, and what would be, would it be significant to our size, the order size?
So since this is a tender and RFP and in a competitive tender, I do not want to disclose more details about this.
But we supply all the components or only 1 or 2 components?
This is what I'm saying. We do not want to discuss anything beyond that.
Okay.
Please appreciate that this is a competitive tender.
I see. Also, the next question, sir, is I think we have a patent with I think one of the labs for Netra primary radar. So, and I think some order is expected in Netra or order is received. I am not clear. So can you maybe talk about what kind of commercial orders are expected in Netra, and then will we supply only primary radar or some other components as well?
In Netra, you are talking about Mark 1, AWC Mark 1? Yeah. So there we supplied, we have supplied subsystems of primary radar. And this we have already supplied a few years back, and we are getting some repeat contracts for maintenance and also for one more aircraft, I think. So we have orders on hand, and also we are likely to get some for the space.
So Netra, sir, there is no kind of active order. I thought there was an order for some 11.
We have orders, and is under execution. In this quarter, in Q2, we are going to execute that.
Okay. And sir, this Samudrika program, there are think total 7.
Sorry to interrupt you, sir. May we request that you return to the question queue, follow-up questions, as there are several participants waiting. Thank you very much. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Ravindra Shah from RSH Investments. Please go ahead.
Thank you, sir. Thank you so much for providing the opportunity. Sir, I have 2 questions. The first question is, can you please elaborate a bit on your Bangalore facility? Like for which business this facility will be dedicated? Domestic defense, space, or other business segments?
Originally, we have created that facility for our systems integration and testing, especially in the radar and the electronic warfare domain. And we have built an FTR facility also, and also assembly hangars to handle and address the radar systems. And also we have created a space division in Bangalore facility. We have incorporated 100% subsidiary unit, Astra Space Technologies Limited. And that group is basically going to address all future satellite requirements. And that is they are also working in the same facility. We have created the infrastructure to meet that particular requirement.
Okay, got it. And what kind of opportunities do we foresee in the global space business on the BTS side?
Actually, we are focusing more in the Indian market as of today. We would like to, address this Indian market and then wanted to address the global market. Yes, opportunities are there. Opportunity size is very large as far as the space segment is concerned. So that is the reason why we are investing into this particular sector, and we are planning to enhance our operations in this particular segment. But to be precise figures and all, we don't have as much as far as the global business is concerned. But for Indian, yes, we have figures. Based on that, we worked out our business model.
Okay. That is from my side. Thank you so much, sir.
Thank you very much. The next question is from the line of Keshav Harlakka from BHH Securities Private Limited. Please go ahead.
Hi. Thank you, sir, for an excellent set of numbers. So, am I audible?
Yes.
Yes. So, I just wanted to know about the seasonality of margins and revenues and profits. So, we did a EBITDA margin of 15.5% for Q1 of FY'25 versus 2.3% for Q1 of FY'24. And for Q4 of FY'24, we did a margin of 22.8% versus year-on-year margin of 12.2%. So, can you comment on the seasonality of margins, sir?
See, basically, we have used the word seasonality because even as a top line, most of the top line happens in Q3 and Q4. And since the margins are directly related to the top line, we have used the word seasonality of the margins. Then again, answering the specific question in terms of the margins, what you have indicated, which I already answered earlier. Essentially, it all depends on the product mix. Suppose if I have a major defense product being sold in a particular period, probably my margins will be much higher than the previous quarter, where the sales would have been more towards the exports. So generally, the margins are directly related to the product mix, and hence, we have the seasonality of the margins is indicated.
Got it. Now, can we have some band, or you cannot predict the band? Would it be within 15% to 25% is what one could expect, or you don't want to pass any comment on this?
I can give an indicative gross margin. Below that, I do not want to get down.
Okay.
The gross margins generally around 40 to 45% will be there. If my overall domestic mix is in excess of 70% in a particular period.
Got it. Okay. Thank you so much. Thank you.
Thank you very much. Before we take the next question, a reminder to all the participants. a reminder to all the participants that you may press star and one to ask a question. The next question is from the line of Nishi Shah from RH Investments. Please go ahead.
Yeah, thank you for the opportunity. So, I have one question. What kind of margins does the space business comes with, and is it same as the domestic defense orders, or is it better than that?
No, more or less, we carry the same margins between space and defense.
Okay, sir. That answers my question. Thank you for the opportunity.
Thank you very much. Ladies and gentlemen, we will take that as the last question. I would now like to hand the conference over to the management for closing remarks.
Thank you everyone for attending and sharing your thoughts. I hope we have answered all your questions and look forward to meet you again at the end of Q2. Thank you very much and good evening.
Thank you.
Thank you, guys. Bye-bye.
On behalf of Astra Microwave Products Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.